Hey everyone, welcome back to LutaMarkets. I want to start today with something that might surprise you. We always talk about trading strategies, indicators, and market patterns, but here's the truth bomb. Your trading results are only about 20% dependent on your strategy. The real game changer? It's your psychology. That's right, a full 80% of your trading success comes down to your mindset and how you handle your emotions. Think about that for a second. You could have the most brilliant trading strategy in the world, but if your psychology isn't right, you'll still lose money. On the flip side, traders with decent strategies but excellent psychological control consistently come out ahead. That's why today's lesson is so crucial. We're diving deep into Trading Psychology 101. Now, be honest with me, how many times have you closed a trade too early because you got scared? Or jumped into some hot stock because everyone was talking about it and you didn't want to miss out? We've all been there. The reality is, most traders don't fail because their strategies are bad. They fail because their emotions take over at critical moments. Fear makes us exit too soon. Greed makes us hold too long. FOMO makes us chase bad trades. These emotional reactions are completely normal, but they're also completely destructive to our trading results. The good news? Once you understand how trading psychology works, you can start recognizing these patterns in yourself and learn to control them instead of letting them control you. That's exactly what we're going to cover today. We'll break down the psychological traps that catch most traders, explore why our brains work against us in the markets, and most importantly, I'll give you practical tools to overcome these challenges. Because here at LutaMarkets, we're not just about giving you information, we're about helping you actually apply it to become a better trader. Alright, let's get into why trading psychology is absolutely make or break for your success in the markets. I want you to picture two traders. Both have access to the same charts, the same news, maybe even the same trading strategies. But one consistently profits while the other keeps struggling. What's the difference? 9 times out of 10, it comes down to their psychology. Here's the thing, good trading psychology does 3 incredibly powerful things for you. First, it's what separates the winners from everyone else. The markets don't care about your feelings or your opinions. They just are what they are. The traders who succeed are the ones who can separate their emotions from their decision-making. When you master your psychology, you stop being at the mercy of the markets and start operating from a place of control. Second, and this is huge, it helps you control those knee-jerk impulses we all struggle with. How many times have you made a trade because you felt you had to be in the market right now? Or exited a position prematurely because you got scared? I've been there too. Strong trading psychology acts like your internal braking system, preventing those emotional decisions that quietly eat away at your profits over time. Third, and maybe most importantly, it builds real discipline. Trading isn't about hitting home runs, it's about consistently following your process, even when it's boring, even when you're itching to do something, anything. The disciplined traders are the ones who survive the inevitable tough periods and come out stronger on the other side. Now let me show you something eye-opening. Look at how professional traders think versus how most retail traders operate. Retail traders, and this isn't judgment, we've all been there, they chase quick profits. They get excited about hot tips. They make decisions based on emotion rather than analysis. And here's the brutal truth. Studies show about 70% of retail traders lose money within their first year. Now look at professional traders. Their focus is completely different. It's all about risk management first. They set long-term goals, not get-rich-quick fantasies. They follow disciplined approaches even when it's uncomfortable. And this mindset difference is why they're consistently profitable while most retail traders struggle. So if you're ready to stop being your own worst enemy in the markets and start making decisions from a place of confidence rather than emotion, you're in the right place. Let's get started. Now let's talk about the invisible enemies in your trading, the psychological biases that sabotage your results without you even realizing it. These are like optical illusions for your brain. They distort how you see the markets and your own trading decisions. First up, we have loss aversion. Here's something fascinating about human psychology. The pain of losing $100 is about twice as strong as the joy of gaining $100. This is why so many traders fall into these traps. You hold on to losing positions way too long, praying they'll bounce back. You take profits too quickly on winning trades because you're scared they'll disappear. It's like your brain has this built-in alarm system that screams avoid pain, even when it's the worst thing for your trading account. Then there's overconfidence bias, and this one's especially dangerous after a few winning trades. You start thinking you've figured out the markets. That hot streak wasn't luck, oh no, it was obviously your brilliant trading skills. Next thing you know, you're taking oversized positions, ignoring risk management, and, boom. Reality check. The market has a funny way of humbling overconfident traders. But here's the sneakiest bias of all, confirmation bias. This is when you only pay attention to information that agrees with what you already believe. For example, you're long on a stock, so you only watch the bullish analysts. You ignore warning signs because they don't fit your narrative. You dismiss contrary evidence as just noise. I've seen traders hold on to sinking stocks for months, clinging to one positive news story while ignoring 10 negative ones. It's like having blinders on, and it's incredibly common. The scary part? You usually don't even realize you're doing it. Here's the bottom line. These biases aren't character flaws, they're built into how all human brains work. The key isn't to eliminate them, that's impossible, but to recognize when they're influencing your decisions. That moment of awareness is where you start taking back control of your trading. Alright, we've talked about the problems, now let's talk solutions. Because here's the good news, while we can't eliminate emotions from trading, we can absolutely learn to manage them like pros. Think of this as your emotional toolkit for the markets. First tool, identify your triggers. Every trader has their kryptonite. For some, it's seeing red on the screen. For others, it's watching everyone else make money while you sit on the sidelines. Here's what I want you to do. After your next emotional trade, pause and ask, what was I feeling right before I clicked that button? Was it anxiety from watching the price drop? Excitement from seeing a stock skyrocket? Frustration from missing a move? When you can name the emotion, you take away its power over you. Second tool, mindfulness, your secret weapon. This isn't some woo-woo concept, it's practical trading psychology. Before entering any trade, try this. Take 3 deep breaths. Ask, am I following my plan, or am I reacting? Notice any tension in your body, that's often emotion talking. This 10-second pause can save you from countless bad decisions. Third tool, the trading journal that actually works. Most traders journal wrong. It's not just about recording trades, it's about recording yourself. For each trade note. What emotion was driving me? Did I stick to my rules? How did I feel after? After a month, patterns will jump out at you. You'll see, oh, I always overtrade on Fridays, or I get reckless after 2 losing trades. Now let's talk about the 4 horsemen of trading apocalypse. Fear makes you exit winners too soon. The antidote? Trust your stop loss and let profits run. Greed, that voice saying just one more trade or double down. Remember, pigs get slaughtered in the markets. FOMO, that sick feeling watching a stock moon without you. Repeat after me, there will always be another opportunity. Revenge trading, serious tone now, this is how accounts get blown up. That desperate attempt to get back to even usually digs the hole deeper. If you catch yourself thinking, I'll show the market who's boss. Walk away. Seriously. Close your platform. Your future self will thank you. Here's the truth, the best traders aren't emotionless robots. They've just learned to recognize when emotions are driving, and when they are. That's the difference between reacting and responding, and it's what separates consistent profits from constant frustration. Let's bring this all together, because trading psychology isn't just theory, it's what separates those who survive the markets from those who thrive. Here's what I need you to remember. 1. Master your emotions. This isn't about suppressing fear or greed. It's about recognizing them, naming them, and making sure they don't hijack your decisions. The best traders feel the same emotions as everyone else, they just don't let those feelings press the buttons. 2. Self-assessment is non-negotiable, the market changes. You change. Your strategy should too. Every week, ask yourself, what's working? What's not? Where did I let emotions override my rules? This habit alone will put you ahead of 90% of traders. 3. Never stop learning. The traders who make it long-term are the ones who treat this as a craft, not a casino. Books, courses, mentors, they are force multipliers. If you're serious about trading, be just as serious about studying it. Now, I want to hear from you. Drop a comment below. What's your biggest emotional hurdle? Is it fear that paralyzes you? Greed that makes you overtrade? FOMO that has you chasing pumps? Let's get real about it, because the first step to fixing a problem is admitting it exists. And if this video clicked for you, if you're tired of being your own worst enemy in the markets, hit that like button. It tells YouTube you want more content like this. Subscribe if you haven't, because next week in Lesson 2, we're diving deeper into building unshakable discipline. Until then, repeat after me, I trade the market in front of me, not the one in my head. Stay patient, stay disciplined, and I'll see you in the next one. Cheers.